How's the market? As real estate agents, we are asked this question a lot. We want consumers to understand just how broad this question is. Today, we will answer it on a national level, on the City of Chicago's level, and the near South Side neighborhood level. We could even go further and view it by property type and price range. Please contact us if you would like to delve further for your personal interests. Nationally, existing home sales are up. Last year in February, there were 4.6 million homes on the market, and this past February, that number jumped to 4.9 million, a 6% difference. But what did that look like in Chicago? Well, the numbers were actually pretty flat. In February 2014, there were 8,558 homes on the market, and this past February, there were fewer, 8,366. It was a difference of 2%. So how did the near South Side look? It actually looked a lot more like the national numbers. In February 2014, there were 178 homes for sale, and in this past February, that number jumped to 188, a 5% difference. But what about pending homes, those that are under contract? The National Association of Realtors has an index to measure this. The line at 100 on this graph shows a healthy level. In February 2014, the index was low at about 94, but this last February it increased dramatically to about 108, a very healthy level. In Chicago, we can look at the actual numbers of homes under contract, and again, there was a great increase from 1,218 last year to 1,401 this year and rising into March. From February to February, the near South Side didn't see much of an increase, only 63 last year to 69 this year, but that number skyrocketed to nearly 100 in March as the weather warmed up. So to answer the question, how's the market, we can take these numbers to calculate the month's inventory level. If inventory is less than 6 months, it is a seller's market. Homes that are priced well and in good condition move very quickly. This can be frustrating for buyers because they are more likely to see multiple offers on one property. When the month's inventory is between 6 to 7 months, it is balanced. There are about as many buyers and sellers and things run smoothly. This never lasts though. When inventory is greater than 7 months, it is a buyer's market. There is a glut of inventory. We tend to see more investors and buyers looking for a deal at this time. Currently, national inventory levels are low, under 5 months. It is a seller's market in each of the markets I am discussing. The City of Chicago has less than 4 months of inventory, and the near South Side is at less than 3 months. There is no inventory, but this is a good time. Real estate is seasonal, and historically most homes come to the market in April, May, and June. So what do buyers and sellers need to consider as they plan their next move? Sellers need to price their home carefully. If they price it at market value, they will typically reach 60% of the buyers they are targeting. If they price it by about 10% under value, they can reach 75% of their target, encouraging a multiple offer situation and possibly selling for over asking. They risk that not happening and instead selling it for undervalue or selling it for so high overvalue that the appraiser does not agree with the price. Pricing it at about 10% overvalue cuts their buyer reach to 30%, but there is less of a chance of multiple offers. They might have to cut the price to reach more buyers, but they might sell at or above market value even if it is less than asking. Buyers and sellers need to consider their mortgage rates. These can have a big impact on what buyers can afford. Rates are still very low, but experts believe they could rise nearly 1 point over the next year. Let's see how that might impact a buyer's purchasing power. Today, rates are at about 3.7%. If a buyer wants to keep his monthly payments of principal and interest to under $1,900, at today's rate, he can afford a $400,000 home. If the rates rise by 1 point, he can only afford a $360,000 home. That's a difference of $40,000. What can $40,000 get you? Well, in the South Loop, a parking spot typically sells for $25,000 to $30,000. What can you get with that other $10,000? Perhaps a few square feet, or nicer finishes, or amenities such as a doorman, pool, or a party room. With all of this in mind, I hope the next time you want to ask an agent the age-old question, instead ask, how's my market? and open the conversation to relate it to your personal real estate goals.